Hey everybody, this is Jim at SP500chart.com. It is a little after 5 o'clock on March 26th, 2013. We're going to use some time-honored techniques to try to understand these modern markets. And this is one of our featured daily technical analysis videos of the S&P 500 index. Before we get started, I need to tell you, the website and the video are for educational purposes only, and nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional, just a guy that draws lines on charts. Let's take a look. I have to be honest with you, my patience is wearing thin with the market, the S&P here. We're not getting a pullback. This son of a gun is just plowing on ahead despite, and I really don't want to get political, but despite the incredible events that have taken place in Cyprus, despite the potential for these same events to take place in other European nations that are of much more significance than Cyprus. I want you to put yourself in the shoes of someone who has who had a bank account in this small nation, island nation. You go to bed at night and you've got $1 million in the bank. You wake up the next morning and you can't get it out. Then the government tells you you don't have $1 million. You've got $600,000. We're taking 400 grand. Think about that. What if that happened here? Well, you know, the case could be made that quantitative easing is no different. It's just instead of a smaller nation where the dollars have to be confiscated, in a larger nation that has the legal authority to print currency, we just print it. And so you still have a piece of pie that looks the same on paper, but when compared with the overall number of dollars, the percent of what you own and the buying power of those dollars will eventually be impacted by the printing of money. So, it's funny, I was thinking, gee, it's just horrible what's going on over there. But I stopped and thinking about it, it's going on here too. It's just under the guise of something else. So, it's just amazing to me, though, that here we are about ready, to break through and set all-time highs in the S&P. When in other countries around the world, governments are closing down banks and taking 40% of the value of those accounts. So I'm just a little incredulous that the market is not reacting to that. And that gives me the feeling that this market is now being driven by possibly fear and greed. Now, what do I mean when I say fear? I don't mean fear of world events. I mean fear of missing gains in the market. Because obviously buyers are ready to step in at any excuse to buy. And I've said all along, I think we're going to get up there and we're going to test something close to 1600, but it's a little strange to watch, to be honest with you. It's a little goofy to see that for almost 3 months of this year, the S&P has just been impervious. It's a good sized move, don't get me wrong. It's nothing like what we were seeing at other parts in the chart here. But it's still, I just kind of shake my head. So anyway, what are we looking at? Well, we are still underneath this little support line that we established yesterday. Hey, that's my phone. Support line that we established yesterday. That's where I was. So anyway, I think I was talking about this little line, this line of resistance that we are approaching again. And if we get over that, then I think you have to call this for what it looks like. And that is, even though it's not a perfectly formed pattern by any stretch, it would be a bullish event to get over 1565 with some conviction. And that should, I have to draw my line here, produce a move of wherever it gets over that line. Since we've moved this line now, it would have a little bit more bullish outcome, getting up probably close to 1590. So I guess the question is, first, will that happen? And B, if it happens, how much more before we face what would seem to be an inevitable downturn as a corrective move, whatever you want to call it, as we have been breaking some support lines. You could see this red line here. It's gave way back here, then we came back to it, couldn't really get back in that channel for a number of days, broke down again, and now it looks like we're setting up yet another back test of this line. So wow, what a turn. Well, I don't want to say a turn of events, but what a resilience this market seems to be showing right now. So obviously we've been getting some more volatility. We got kind of spoiled back here during this 8 days or so, where we just kind of melted up. Now we're getting some volatility back into it. And, to my eye, guys, this looks like we're probably headed up to the 1590s or something. And the signal would be getting over that 1565 barrier. So that's about all I've really got for today. Again, you see it for yourself. Market is making up its mind. And if we get over this line with any conviction, and then it looks like 1590s. Here we come, getting real close to that 1600 level. By the way, if we do hit the 1590s, you know what the headlines are all going to read. They're going to read record high in the S&P, because I believe our previous record high. Just a second. Was the last would have been 1561, so that may actually have been a record close. It's hard for me to tell you for sure. Was that a record close? It's not a record high, but that may represent last was 1561. Yep, that is a record close today. I should have been prepared to mention that. I believe I don't know. Someone tell me. Was today a record close in the S&P? I know we hit the mid 1570s back in the fall of 2007. Whatever. It's not that important. The line that's important is this one right here, because that's a line that's drawn over the 2000 and the 2007 highs. So that's the line that I'm looking at to see if it breaks. So guys, there you have it. What can you say? Just a real inexorable, is that the word, climb off of these November lows, and then continuing all throughout the past 3 months. And it sure looks to me like this market is due for a doggone correction, and I'm not buying it until it does. And it may be my loss, but I'm not giving in to that kind of fear that says I've got to buy this market here or I may lose out. I'm not going to do that. So I hope you will exercise caution at these levels, because we're awfully close to some potentially dangerous territory. Look, thanks for watching. Thanks for your support. Thanks for your subscription. And, oh, hold on. That's the slide I meant to show you. So thanks again for watching. Take care.